Ladies and gentlemen, welcome to the Q3 FY23 results conference call of Monte Carlo Fashions Limited, hosted by Emkay Global Financial Services. We have with us today from the management of Monte Carlo Fashions, Mr. Dinesh Gogna, Director, Mr. Sandeep Jain, Executive Director, Mr. R.K. Sharma, Chief Financial Officer, and Mr. Ankur Gauba, Company Secretary. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Bhavika Chaudhary from Emkay Global Financial Services. Thank you. Over to you, ma'am.
Thank you. Good morning, everyone. I would like to welcome the management and thank them for this opportunity. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Very good morning, everyone, and thank you for joining us for this earnings call of Monte Carlo Fashions Limited to discuss the financial and the operating performance for 9 months and the third quarter performance of financial 23. I would like to highlight that certain statements made or discussed over the conference call today will be a forward-looking statement. A disclaimer to this effect has been included in the result presentation shared with you earlier. Result documents are also available on the company's website and also have been updated on the stock exchanges. A transcript of this call would also be made available on the investor section of company's website. First, I would like to talk about the macro environment. The Indian economy has rebounded strongly despite the significant COVID-19 waves. Financial 23 has seen a solid showing of Indian consumption story returning in full force, and we have also witnessed better than pre-COVID performance. All our stores across geographies continue to be fully operational, and the strong brand pool of Monte Carlo is drawing in solid footfalls and generating sales growth. Indian domestic textiles and apparel market is expected to grow 10% CAGR to reach 190 billion by 2026. And the shipping consumer preferences towards branded apparel give us ample scope for growth. Now let me share the financial and the operational highlights of 9 months of quarter 3 of financial 23. The company recorded revenues of 519 crore during quarter 3 financial 23 as against 462 crore during quarter 3 financial 22, thus registering a growth of 12.4% year-on-year. Operating EBITDA for this quarter was 130 crore against 114 crore in Q3 financial 22. The profit after tax stood at 86.3 crore as compared to 77.5 crore in Q3 financial 22. Revenue from operations 9 months stood at 881 crore as against 742 crore in 9 months financial 22, growing by 19% year-on-year. Operating EBITDA was 185.4 crore in 9 months as against 157.7 crore as compared to last year. Thus, it's a growing of 18% year-on-year. PAT stood at 112 crore in 9 months financial 23 as against 101 crore in 9 months financial 22, growing 12% year-on-year. Our balance sheet remains robust and we continue to enjoy a net debt-free status. We have a cash balance of 265 crore, which comprises of cash and bank balance along with the current and non-current investments. Long-term borrowing is 5.85 CR as of December 22 compared to 8.3 CR of March 22, which shows our efficiency in serving the debts. Monte Carlo Fashion continues with this endeavor to build a leading branded apparel company with a well-diversified product portfolio such as cotton, woolen, kids and home furnishing. Apart from the cotton segment, we also produce different other garments. We also produce cotton t-shirts in the economy category under the brand Clock & Decker. The ability to tap various market segments provide the company with tremendous opportunities for growth in the coming years. The key strength is wide and growing distribution network with a diversified presence across India. The company's product reaches the end user through different distribution channels. The company currently has 2,670 MBOs plus SIS, 347 EBOs, 788 national chain stores. Concerning online sales, we are looking to focus more on selling through our own portal. However, our clothes are available on various e-commerce websites such as Ajio, Amazon, Flipkart, Myntra, FirstCry, Jabong and Capsons. The company has opened 30 new stores in different regions, out of which 7 stores were opened in northern region, 2 in central and 4 in eastern region. With this, the total number of EBOs has reached approximately 347 across 20 states and 4 union territories. The company maintains its yearly guidance of opening 40 to 45 new stores as informed earlier. The trade show for September 23 conducted in September 22 witnessed healthy traction, helping to build a robust order book for summers. The company continues to strengthen its position in cotton and woolen portfolio simultaneously, thus building resilience and strength in its operation. Most of our net revenue is from franchise EBOs and MBOs, where we primarily sell on outright basis. Under the business model, there is no significant inventory risk, and we remain insulated from the average hazard sales in a branded apparel business. I would like to highlight that to date we have experienced almost zero bad debts in our business, which stands as a testimony to our robust business model based on zero credit risk policy for the company. At Monte Carlo, we pledge to provide our customers with finest clothing through product innovations, high quality, and the launch of new collection from time to time. Moreover, we continually work towards changing the look and feel of our stores to give our customers the best-in-class experience. We are optimistic about our future growth and earning potential. We believe that we have a strong foundation for the future, which can provide with sustainable and profitable growth for the long-term term. While our focus will be to maximize revenue growth going forward, our considerable interest is to build profitability by maintaining cost control measures. To further enhance the recall and the visibility of our brand, we are focused on advertising by different platforms like televisions, online and retail channels, national and regional newspapers, hoardings and billboards displayed at airports and cinema. Monte Carlo maintained its first mover streak to implement digital solutions in the industry. We are also pleased to share that in line with our digital focus to build robust process and to enhance our customer experience, the company has implemented SAP S4HANA solution, fashion and vertical business. This is an intelligent ERP providing real-time insights in all areas of business and a predictive consumer trend insights. This will enhance our flexibility and agility to deliver end-to-end customer experience and at the same time to achieve significant bottom line cost savings. Now we can open the floor for question and answer sessions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. Just one question regarding the outlook for the next financial year in terms of your revenue growth and the EBITDA margins. How do you expect the business to build over for the next year? If you have any views on that.
Thank you. So, as far as the forward-looking guidance for next financial year, we normally give once we have the fourth quarter results, because in that case we do get the inventory at our retail stores, at our warehouse, and also we have a trade show which normally happens in March. So we'll be in a best position to give the forward-looking guidance and for the EBITDA margin once we have the final results of next quarter.
Okay, but overall, as an idea, you do expect the growth you're seeing so far to continue on the similar lines, if I have to ask?
Definitely, there's no doubt about that. We see that we have been, last year we grew around 40% and this year will be around 20%. So we think that this momentum will keep going on because we had a very good winter this year. And also we expect that the retail inventory at the store should be at last year's level. So we don't see any challenges going forward. And I think macros are also now very favorable as compared to last quarter.
Okay. So you do expect the current run rate to continue, which is a positive sign. Yes. Okay, sir. Thank you, and wish you the best.
Thank you.
Thank you. The next question is from the line of Deepan Shankar from Trustline PMS. Please go ahead.
Good morning, everyone. Thanks a lot for the opportunity and congratulations for a good set of numbers. So firstly, wanted to understand, so woolen, do we foresee some more growth extending to Q4 due to extended winter?
See, normally USS happens in Jan Feb. So the woolen is definitely the sale is on. So this sale will be closed by 20th of February. But at the same time, the summer dispatches have started. So the major contribution from the fourth quarter would be from the summer sales.
Okay. And how is the inventory level for woolen products in the market, and also how is the discounting season happening for Q4 for woolen?
Inventory level we will only come to know once we have around 15th of March, but we think that it has come down to last year's level, seeing the sale trend which has happened in January and February. And we are very hopeful that even it can go down before the last year's level.
Okay. And what is the specific reason for 16% decline in online sales, sir?
See, I think some dispatches have been delayed, and there was one more reason that actually one of our customer who was outright buyer, so they shifted to consignment sales. So in that case, some of the order we have to miss in that case. So that was actually that affected this quarter. But we are hopeful that we'll start picking up from the next quarter.
Okay. And we have seen this advertisement expenses has been higher for Q3 and 9 months. So do we expect this 36 crore yearly run rate to sustain now on?
See, we were previously doing 3 to 4% advertisement only. So on the COVID year in last 2 years, we brought it down to 1 to 2% to save our cost. But now we think that to enhance our brand visibility and also to enhance our presence in South and West, we need to do around 3% of advertising. That's what the company did in this financial year.
Okay. So lastly from my side, so this home textile and kids segment growth has been lower. So any specific reason, or do you expect in the coming quarters to pick up?
We guided for 30% growth in kids and home textile segment, and we'll be achieving that in full financial year.
Okay. Thanks a lot and all the best.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Thanks for the opportunity and congrats on a good set of numbers. Sir, I wanted to check winters this time around were delayed. So in December, winters were not that cold. As well as Holi is a bit earlier this time around. So you have alluded to this, but I just wanted to understand better. Do you expect higher discounting this time around just because Holi is also a bit earlier?
You are right that the winter was delayed, so the USA sales have started, and also there were more discounts as compared to last financial year. But we have a lot of cushion as far as our pricing is concerned, and I think that we have already done the adequate provisioning to safeguard ourselves as far as the margins are concerned.
So this provisioning impact has already been taken in Q3 or it can come in Q4?
It's already been taken in Q3.
Got it, sir. And there were also indications that from an entire company point of view that there was mixed sort of growth trends during the quarter, with October, December being good and November being a little weak. So do you also expect some sort of a postponement of that demand into Q4?
No, I didn't get your questions properly. Can you please repeat it?
Sir, this time around the general feedback that we are getting is that October and December were good, but November saw a very sort of weakish growth trend. So I was asking, since January is also been a little colder, so do you expect some of that demand to happen in Q4?
No, January has been it was exceeding our expectation. You are right that October was strong, December was strong, November was a little weak. But I think January we grew almost more than 30% at our retail stores. So the demand was very good because of delayed winters and extreme winters. So that is why we have been able to, lower down our inventory, as I said earlier also.
Correct. Okay. And sir, what is the extent of price hikes that we have taken over the last 2-3 years? So I just want to understand, as in higher prices can also impact demand due to higher inflationary environment. So what is your sense on that?
See, as far as this year is concerned, we took a price hike of almost around 8 to 10% in our winter wear category. And in summer wear category, it was around 5 to 7%. And if we go last year, again it was 5 to 7%. So it depends on if we see on an average, we increase 5 to 6% prices every year depending upon the raw material and other cost increase. But last year was exceptional where the raw material price have gone up very steep hike. So we have to increase the price around 10% to sustain our margins.
Correct. And how is the RM situation now, sir?
Now I think I'm very glad to share that the price of raw material have come down. So it is going to benefit us going forward in next financial year. As the raw material commodity prices are going down every year, so I think we will going to benefit with the lower cotton prices, lower wool prices.
Okay. So you don't intend to sort of take a price cut, and whatever the improvements will be there through RM decline, that should come in our gross margins. Is it a good understanding?
No. The price, once it is, absorbed, the price accepted by the consumers, and the consumer is accepting the prices, no point of cutting down the prices. So normally, even if it goes up 2 to 3% every year because of certain costs are, getting up. So we are not going to cut any prices going forward. The cost.
Last one from my side, I just wanted to understand how does this movement for online channel from outright sales to consignment-based sales impact the unit economics of this channel? So I want to understand, so obviously our, I guess, working capital will be higher, but we will be making some higher margins. So just wanted to understand if this understanding is correct.
There's nothing to worry about it. It contributes only 4 to 5% of my turnover. That is very, very less. And even if the channel is just 0.5% of outright sales and 1%, isn't going to make any significant difference as far as the revenue and margins are concerned.
Okay, but still, sir, in consignment model, how are the unit economics different than outright sales?
Consignment models are little less, 150 basis point as compared to outright sales.
Okay. Got it, sir. Thanks, and that's it from my end.
Thank you. The next question is from the line of Nitya Shah from Kamaya Kya Asset Management. Please go ahead.
Yeah, hi sir. Congrats on a good set of numbers. So I wanted to understand, in the past we have hired Andre Russell, the cricketer, as part of our advertising campaigns. And now you spoke about the fact that the margins going forward will also improve due to lower raw material costs. So I just want to understand, are you planning to increase your advertisement expenditure as a percentage of revenue, and what are your advertising plans in the future? Do you plan to hire any more celebrities for better brand awareness and so on? So I just wanted some guidance on that.
Yeah, sure. We would like to keep our margin, advertising guidance for 3% as far as revenues are concerned. And yes, we are thinking of including celebrity also in our ad campaigns going forward. So when that will happen, we'll definitely inform in our next conference call.
Great, sir. All the best for the future quarters.
Yeah, thank you.
Thank you. The next question is from the line of Vikas Khemani from Carnelian Asset Advisors. Please go ahead.
Hi, Sandeep. How are you?
Yeah, good.
Great. Congratulations, good number. Few questions, Sandeep. One is that, could you share what's your store opening target next year? Because I think this year you already exceeded what guidance you gave. So how are you thinking about next year or maybe next couple of years? It's good to hear, because I think that could be a good vector of growth, as you are still very, very under-penetrated in the large part of India. Right? So some more concrete guidance on that would help.
Because your voice is breaking, but as I understood the question, clearly that you wanted to ask how many stores opening plans we have for the next financial year, and strategy also. See,
Yeah.
I think this year we opened around 40 to 45 stores, which we are on the track of achieving that guidance. So next year we are increasing our guidance to 50 to 60 stores as far as store openings are concerned. And also we're putting a lot of focus on South and West. And we assume that at least 20% stores will come in South and West out of the new store openings.
Right. And secondly, we have now a lot of cash, right, sitting on our books, which obviously is a drag on ROE. And you generate almost 120, 130 crore cash every year again now. So any plan to do any buyback, dividend? Because last you did was only 19. So it's been like 3-4 years now. So what's the plan of cash which is there on the balance sheet?
See, as I think we have discussed in our last financial call also, that this year CapEx will be huge because we are putting up a mink blanket plant and a quilt plant at J&K. So some of the cash would be, because not everything we are taking on debt. So as far as land and building is concerned, as there is a no interest dimension scheme on that, so we are putting our own money in land and building. So that would, in wholly owned subsidiary, so that would be around 40-50 CR. So some of the cash would be used over there. And yes, definitely we are a dividend paying company and paying a handsome dividend every year. Dividend will be shared with the shareholders. And also, if there is any plan for any buyback and anything, that all can be discussed in the board meeting, but that has not discussed yet. So if there is any plan, definitely we'll let exchanges know about that.
That's in due course of time we will inform.
Okay, Sandeep, thanks.
Thank you.
Thank you. We have the next question from the line of Danesh Mistry from Investor First Advisors. Please go ahead.
Hello, sir. Hi. Good afternoon, and thank you for taking the call, and congratulations on good numbers. Heartening to see that your gross margin has been improving as you had guided in the beginning of the year. Sir, I just a couple of questions. The first is on your other expenses. If you can just help us understand what has driven this other expenses this time round. Because remember last year, same quarter, Q3 FY22, we had the CSR expenses in the base. So last quarter you had said that now you are amortizing some of these expenses. So what is the reason behind this 25% increase in other expenses, sir? That is question number one.
I think in other expenses, if you see, the major cost is advertising. So which was 780 lakhs.
I'm saying without advertising. So advertising has gone up from 8 crores to 15 crores.
28 crore, yes.
Haji. No, I'm saying for the quarter, I'm saying, sir. But if you...
I think all other expenses are normal. It's advertising cost which has actually pushed the cost higher. It was, and business promotion expense also have gone up in 9 months as compared to last financial year. Otherwise, all other expenses are in the line. 15.76% was last year and 16.2% is this year. So it's in line.
Okay. No, I was just trying to understand on a quarterly basis. If you see slide 10 of your presentation, there you've actually said that in Q3 FY22, other expenses were 47 crores. They are now close to 57 crores. So is there any one-off in that as well is what I'm trying to understand, sir, in the quarterly number.
So if we see the percentage-wise, it is 10.16 and 10.9%. So it has gone up accordingly. These years have gone.
All right. Okay, sir. Understood.
And you have to see the percentage comes basically.
Okay, sir. Understood.
Yeah.
And sir, in terms of this, you mentioned that you had a good sale of your inventory, given that you had some winter spillover. So is it possible for you to share the current debt number that we have, sir, on our books, the gross debt?
The long-term debt?
Substantially.
The long-term debt you are asking?
Both, sir, long-term as well as the short-term working capital, sir.
Yeah, so long-term debt is just 5.8 crore only, and the short-term debt is 200 crore.
200 crore. Okay, got it. And in September, sir, what was this figure?
Yeah, just wait for a moment.
Long-term and short-term?
So long-term it was only 7 crore.
And how much was short-term?
Yes. And short-term was approximately 150 crore.
150 crore in September.
In September. So our debt pay down will still happen in short-term. Is it this quarter?
Yeah, working capital actually we are using, basically this becomes very heavy in September and December quarter. It comes down in March quarter. So we would see that in this quarter, it should come down to 50 CR, short-term debt.
Got it, sir. Understood. Sir, right now, sir, what is the cash on the books?
265 crore.
265 crore. Okay, sir. Thank you very much, sir. Thank you and wish you the very best of luck.
Thank you.
Thank you. The next question is from the line of Govindlal Gilada, an individual investor. Please go ahead.
Hello.
Hello.
Yeah, thanks for the opportunity. I got only one question. This finance cost has gone up substantially. Any specific reason, sir?
Pardon?
Finance cost is because of the ROI and higher.
Finance cost is because of two reasons. One is the interest rates have gone up, and secondly, utilization have gone up as the sales have gone up.
The interest rate, it is substantially gone up versus
Sorry to
year-on-year, it
interrupt,
is
Mr.
almost.
Gilada. The line for you is not very clear. I request you to please use
It's
the headset.
utilization has gone up, and secondly, the interest rate was also higher as compared to last year. So that is why the finance costs have gone up.
These are the only two.
These are the only two reasons for this.
Okay, thank you. Thank you.
And if you see the percentage-wise, it is just 1.55% last year. It is 2.16% this year.
No, absolute, it is gone up 128% from 4 crores to 10
Yeah,
crores.
that's the reason the interest rate hike and the more utilization as compared to last year is the reason.
Okay, thank you. So this run rate will continue, sir?
No, I think interest rates have stabilized now, and I think it will come down in going forward. So definitely it will come down. And also, I think utilization will also come down.
Mm-hmm. But on our debt is almost something around 200 crores, and 200 crores quarterly interest 10 crores is, I think working capital also we are using more, I don't know.
What we can do is we can separately share with you the cost of interest and also how much financial charges are extra as compared to last year, depending on these two factors.
Okay, sir. Thank you very much. Okay.
Yeah.
Thank you. The next question is from the line of Dhiral from Phillip Capital, PCG. Please go ahead.
Yeah, good morning, sir. Thanks for the opportunity. Sir, as you said that next year you are guiding to increase, 50, 60 new stores. So, however, if you still planning to open only 20% in the south and west region, so on the overall basis, sir, south and west still contribute, minimum to the overall revenue.
If you see the contribution from south is just 3% and 4%. And we are adding 20% more stores as compared to 20% of total stores. So you think that this is, how we are penetrating more in south and west. If I see percentage-wise, it should be only 5% of the total stores we should open in south and west. But to increase our presence and to penetrate further, we are making it 20% of the total stores open in south and west. So that definitely shows the intention of the company, how they want to grow in south and west.
But sir, why then, at a slow pace, at just 20%, and why not, sir, maybe at a higher pace? Because our presence in that region is very, very minuscule.
Sir, I think you're not getting my point. What I'm saying is that right now, the sale contribution from south and west is just 7%. And the sale contribution from north and east is 93%. So when I say 20%, it means I'm 2.5 times I'm doing the sales, try to do the sales in south and west as compared to northern regions. That is why I'm saying 20% of the stores, new store will be open up in those regions.
Okay. So, sir, let's say next 3 to 5 years, sir, what kind of, south and west revenue it can contribute to the overall, pie? What is our target for that?
I think I can say that this year, last year the contribution was around 5.95%, and this year it is going to be, I think, around 8%. And going forward in next 3 years, we should need to touch, I think, around 15% of our turnover from south and west.
15 to 20
Yeah.
Okay. And sir, as you are, guiding to open 50, 60 stores from 40, 45 stores, so what gives you this confidence, to grow at very higher, pace? So, is there any indication for that, sir? Any?
Right. I think it's only that we see the potential for Monte Carlo to grow in some of the areas where we are not present, and definitely, as you said earlier, that is south and west, where we were opening just 2 to 3 stores. We are opening now 10 to 15 stores. So that is giving us the confidence to open more stores in those areas where we are doing well and where we are getting good response. So that is why we would like to exploit those areas where we can be present more aggressively.
Okay. And so what will be the capex guidance for FY24 and maybe the remaining part of FY23?
Capex, I think, as you already know that we have a mink blanket manufacturing plant which is coming up in this financial year, and also some of the expansion will happen in next year. So we think that going forward we should have a capex of 125 CR, including the normal capex of Monte Carlo and the additional capex of mink blanket plant.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phones at this time. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. So I had some questions. Do we have any dead stock?
We don't carry dead stock. We normally get rid of inventory by 31st of March, and whatever stock is there, either we sell it to some of the people at a very, very discounted price, or we write it off.
So when selling it for discounted price, won't that dilute our brand?
No. It's like, we cut our labels and we give it to some of the people who sell the lots. So that is just, around 10 to 12% of the MRP. In that case, when we sell it to the people who are selling at their own outlets, and there are some outlets in northern region also where we sell this merchandise, and we make sure that it doesn't disturb my existing channels of MBOs and EBOs.
Okay. Some other brands also do that. I'm aware of this practice, but people are generally aware that this Monte Carlo ka ye aane wala hai sale. So generally it happens once in a year. So people would wait for that sale, right?
Yes.
So isn't it affecting us or our sales in the prior period just before the sale?
There are customers who don't want to, who don't see that when the sale is coming. So they have the high disposable income. So they go and purchase anytime, whenever they want. So there are those kind of customers who comes in October, November and December. Then definitely there is a value customer who thinks that he only wants to purchase when the prices are less. So there are two kind of customer, and we are happy to, sell to both kind of customers. And it's for all the brands. It's not for Monte Carlo. It's a worldwide phenomena.
Okay. Also, how many sales seasons do we have in a year?
We have two sales periods. One is for summer USS and second is for winter USS.
Okay. And so
there is no in between mid sales. We don't do any mid summer or mid winter sales. It's only two sales.
Which months would be those?
Normally summer sales happen in July, August, and winter sales happen in Jan and 15th Feb till 15th Feb.
Okay. And so, can we expect any improvement in working capital cycle?
Working capital will remain like that only. We are in such a business where we have heavy third quarter, and so working capital remains like that. It comes down in quarter.
And so we are not into man-made fibers, right?
We do use man-made fiber.
So when you are saying cotton, so it is not pure cotton which we are selling. It must be a mix, right?
It's a mix. There are garments who are made of cotton and polyester also, and there are garments who are made only of cotton. So we use both kind of fabrics.
Okay. So in advertisement expenses, where are we actually advertising? Is it some ROI based advertisement?
Definitely it's ROI based advertising. We are doing ATL and BTL activities above the line and below the line also. We are present in digital, we are present in TV also, we are present in theater also, we are present in hoardings also, in outdoor media. We are also doing print advertising. So all kind of channels we are exploring, and also some OTT apps and other apps where we are making our presence felt.
So I visited one of your stores in Borivali West. For the price point which we are offering, aspirational value wasn't there. Also the store was not, there was no very good response in terms of, I visited on a Sunday. So I understand it is just starting for us in West and South region. But for the price point which you are offering, some of the very premium foreign brands are also offering. So what is the aspirational value which we are trying to create?
I think the simple answer is that if my customers are accepting the price, then only we are able to sell on MRPs in all the regions. But I'm not sure about how you perceive the aspirational value of Monte Carlo when you visit these stores. But normally, as I said earlier, that in Western region we don't have that much of presence. So that is why the customers might not even recognize Monte Carlo as high a brand as it's being recognized in northern and eastern region. So that might be a difference.
Yeah, that's what I'm trying to ask you. In Western region, there was for the same price point I can go for. So my only point comes here over here is are we not going for some discounted sort of strategy to cater to West and Southern markets?
See, we are competing with all the brands. As far as our summer range is concerned, we are very, very competitive. I think you might have taken for buying the winter things, which is little expensive than others. But as far as summer products are concerned, we are very, very competitive. If you see all the shirts, trousers, denims and all, they are at least competitively priced with all the Madura brands, Raymond brands or Arvind brands. You can compare our prices with them, and definitely in winter wear brand also, if you compare our pure wool sweater with their pure wool sweater of Uniqlo or H&M, or our prices are more competitive. But if you compare my pure wool sweater with acro wool sweater or polyester sweater, then definitely we are a little expensive.
Understood. Okay. Yeah, that's it from my side, and all the best. Thank you.
Thank you.
Thank you. The next question. That was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah, thank you very much for. So if you have any queries or any questions, you can please write to our IR agency, Dickinson, and also our CFO, Mr. R.K. Sharma, for further clarifications on any of the queries you have asked. Thank you very much.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us. You may now disconnect your lines.